it gives me great pleasure and privilege to welcome the one and only Dr. Roger Ferguson. Roger, thank you. Thank you for joining us.
Thank you for inviting me.
Yeah. I have to ask, I guess, the obvious question, just before I get to your origin story. Where do central bankers actually come from? Like, my guidance counselor in high school didn't give me that option. So how does someone become a central banker?
Well, in my case, it was a combination of education and financial literacy. So it is a bit of my origin story, frankly. So my mother was a school teacher. She believed in the value of education. She said education is, quote, the only thing they can't take away from you, and whoever you want to think of as they in your life. And she said, stay in school as long as you can. So I stayed in school till I was 30. When I finally graduated, she said, I'm Roger Ferguson, Jr. My family called me Junior. She said, Junior, maybe you could have stayed in school a little less long. But she was proud of all these degrees you talked about. By the way, wouldn't this make a Jewish mother proud? It would make a black mother proud. Just so you know. But my father, who'd grown up during the Depression, and the Depression was traumatic for everybody, but for him, it got him very interested in banks and interest rates. And when many dads would be reading the sports section, my father would be reading the business section out loud to me over dinner. We didn't have a dining room, so at the kitchen table. And so it was only like when I was 10 or 11 that I realized that people didn't always talk about interest rates and thinking basis points. So that's, in my case, that's where they come from, right? And then the thing that really switched on the central bank concept for me was when I was 14 or 15. Andrew Bremer was nominated by Lyndon Johnson to be the first black governor of the Fed. And it all came together. It's like, wait a minute. Education, interest rates, this thing called the Fed, interest rates, policy, et cetera. I want to be an economist.
Wow.
And want to be a central banker. And it's not every 14-year-old with a big afro and Coke bottle glasses. And I think at that point I may have weighed 101 pounds, who decides central banking's for me. Go back in, Mom and Dad, I'm going to be a central banker. What the hell is that? So that's the origin. That's where I came from.
Well, and you were there for some pretty seminal moments. I mean, I believe you were a vice chair, as we talked earlier, during 9/11. I believe you were also the only person there in the Fed that day. Okay, talk to us a little bit about that experience, what that crisis taught you, how it may have changed you.
So let me be clear. I wasn't the only person there. I was the only governor, the only policymaker there. Thank God the staff was there. It'd be interesting to do that literally on your own. And so the story unfolds, again, my wife, who was a commissioner of the SEC, at that moment. The SEC was watching markets. They have a market watch desk. She called me up after the first plane had gone into the first tower and said, you better turn on the TV. Something's happening in New York. We don't know what it is. And so I saw the second plane go into the second tower, and first, like everybody else, it's shocking confusion. What is going on? Planes are flying into tall buildings as the air traffic system collapsed or something. I couldn't imagine what had happened. But then the second thing that clicked in, and it was a blink moment, was all the financial infrastructures in and around what was then the World Trade Center. All of you know Lower Manhattan, you can imagine. What you probably don't know is one of our American banks is actually a global bank that is critical for clearing and settlement. Had its headquarters there. It's called the Bank of New York. And they're one of the 2 or 3 major clearing banks for US dollar currency movements all around the world. I happen to know that for obvious reasons. It's my job to know that, right? And so immediately I thought, payment systems problems, crisis in New York, stock market haywire, everything's going to go crazy. And so literally, this is the most amazing thing. When I look back on the history, by 9:30, I had called a woman named Louise Roseman, who was in charge of overseeing the Reserve Bank systems and the operations of the payment system. And by 9:45, we had put out our first statement that said, this was very technical, the people who run the financial infrastructure. Effectively, it said the Fed's infrastructure called FedWire is going to be open. I won't take you through a tick-tock through the whole day, but the lessons I learned that day are around 4 things. First is expertise. When you're in a crisis, even when you're not, you can't be an amateur. You can't sort of flounder around and not be sure. And I was very fortunate because I had done payment systems work at McKinsey and Company. I was probably the only Fed governor and actually seen the process of clearing checks, which, looking at this room, a number of you know what a check is, but your grandchildren probably don't. And we used to clear checks very manually. We fly them around the country at night, make sure the money was there. Obviously, I'd been in charge of bank supervision and had been very involved in international stuff. So I had enough expertise. The second thing was clarity of communication. So I had to be really clear about what we were going to do on that day. And what we were going to do was use all the Fed's tools to provide sufficient liquidity to keep markets open, alive, et cetera. Very simple message, clear, communicated very, very clearly. There are a lot of strands that came off of that, but everybody in the organization, everybody across the Fed system knew what they were supposed to do. And whatever your job was, and that meant flooding New York with paper currency, something else that's sort of going out of style, or making an international arrangement to lend dollars to the Bank of England, the Bank of Canada, et cetera. So that's the second thing, was clarity of communication, very simple and very direct. The third thing, and this is the one that has become sort of cliche, but really was true on that day, and the third thing around crisis management is empathy. Because the reason I said there are lots of people there, there are thousands of Fed staffers. I couldn't make them all stay. We had a big debate among the presidents of the reserve banks. We have 12 separate reserve banks around the country. A bunch of them wanted to close the system. Those people I could control because they reported directly. So I said, no, we're not going to close the system. But they couldn't make everyone stay. And you can imagine all the emotion that was going on. So being empathetic and projecting that. We're doing something really hard, and I know, particularly for folks in Washington and New York, this is painful. I knew it myself. My son, who was in the 4th grade then, was calling probably every 30 minutes. When are you and Mom going to come home? And you have to sort of deal with that. And then the final thing, obviously, is the importance of fortitude, by definition, right? So those are the things I learned. You have to have some expertise, have to be really clear about direction and making sure people understand it. And at the same time, know you're working with people, so showing empathy.
I mean, it's actually unbelievable. Like when I think about that story and what you were able to string together on that day, because that expression, we're all 9 skip meals away from anarchy or something like that. Like the fragility of the system is so underestimated by most people. Do you find, has the fragility of the system increased, decreased?
Yes.
Yes, both.
A great economics answer, right? In economics, either you're two-handed or you give us a one-word answer to a complicated story. So it has increased in that we continue to be very interconnected. We always were. We become even more so. The cliche, but quite obvious. It has maybe become a bit more fragility because there's much more engineering. Right? So we didn't understand until it occurred the spread of subprime. This is a pretty esoteric product in some ways, but it was broadly used everywhere. And that kind of engineering continues to be the case. You heard one of your speakers here talk about leverage, right? That has always been a problem. Is there more, is there less? But certainly that's something else. And the final thing that we're living through right now is a kind of fragility that's emanating out of the U.S. administration. And so obviously one would say, well, in many ways the system is being strained in ways that we haven't seen in roughly 100 years, which is the use of tariffs. And so that's why I'm a yes.
Well, I think there's also questions today around whether the Fed is truly independent and what that means for the U.S. I'd love to get your thoughts on that. And for us, we have people here from both sides of the border, but for us on the Canadian side, and thinking about the U.S. as the reserve currency of the world and to what extent that independence of the Fed is tied together with that, any thoughts that you could offer on that?
Sure. No.
No.
No one's ever asked me that question. No, so let me be very, very serious. I'm sorry, central bankers are not supposed to have humor, so just ignore all that. So look, when I ask about independence of the Fed, I remind people of a couple of things. First, the Fed was not always independent. during the Second World War, the Fed was told that their job was to keep interest rates low to help fund the war effort. We became independent again in 1951 after really quite a tussle. And the reason I point that out is the power to make money, to create liquidity, is something the executive branch always wants to get its hands on. And even if the Fed became nominally independent and independent by law, presidents have called in chairs of the Fed almost on a, not daily, but quarterly basis to say, we want this, we want that, et cetera. Most famously, it happened in the United States with Richard Nixon, who got Arthur Burns to keep rates low for re-election purposes, and inflation took off. But everyone else has done it, up to Bill Clinton. So that's point one. Not always independent and always a lot of pressure. What is unusual this time, obviously, is the complete use of the legal authority of the president to try to drive that out. We have now on the board of governors a person who's on leave as being one of the president's chief economic advisors. And the president has pursued a lawsuit against one of the governors in Washington to have her removed. And that case has gone to the Supreme Court. So highly unusual time, but unusual, I would emphasize, in magnitude, not in that there's ongoing tension. You then reference the reserve currency. Obviously, the two are tied, no doubt about it. What I say about reserve currency status is, in the history of monetary policy, in the history of the economies around the world, you replace one reserve currency with another. This is not to be complacent about the US dollar forever being a reserve currency, because we can do a number of things that screw that up, and we may be doing them, I don't know. But then you have to go to some other currency, right? So there was a time when the gilt, the UK pound, was the reserve currency. It was replaced by the US dollar. Before that, it was the Dutch florin. There were moments when the Swedish krona or crown was the reserve currency. There were moments when the Spanish, I think it was called peseta, but I could be wrong, was the reserve currency. So we've had a series of reserve currencies, but one has succeeded the other, and they're always associated with the new economy that's risen. What's interesting this time is the economy that's rising is China. They're not running their currency to be a reserve currency. I doubt that many of you hold on to renminbi in your purses or in wallets, or have a renminbi account someplace. Unlike, I suspect, many of you have US dollar accounts. So that's what's interesting this time. We may screw up the reserve currency position. At the margins, we may be losing it a little bit. People point to the amount of international reserves that are US dollars now versus 25 years ago. But in order to say the US is actually going to lose the reserve currency status, you have to believe that something else is going to emerge. And I'm not convinced at this stage that the Chinese economy is likely, or currency is likely to be that. So that's not that's not U.S. exceptionalism and chest beating among modest Canadians. It is really, it's really trying to bring a little bit of economic balance to all of this.
So thank you. Just before we get to geopolitics and the more macro, when you think about your time at the Fed, what was the most surprising learning that you had from your time there?
That's a great question. The most surprising learning is, while central banks are incredibly powerful in some ways, and people now cliche it and talk about it, the power is quite limited to something that's incredibly important. So, what we couldn't do is fix income inequality. Central banks have attempted to dabble with climate change. I don't think they've been very successful at it. To be fair, we are regulators of banks, but at least in the US, the Canadian banking system is much more stable. And the US banking system is relatively chaotic, which is, it is. We have far more banks. There are big mega banks, Jamie Dimon, et cetera, and then we have these tiny regional banks. It's a much more sort of fluid and dynamic thing. And it's really hard at the end of the day to manage all of that with, and I heard one of your speakers complain about the Fed talking about having one tool. So let's say it has 4 tools. It's still really hard to manage the world's largest and most complex economy with the tools that we have. And so you can see how in some ways it's incredibly powerful, but in some ways, you still wish you could do more.
Right.
And so I think that's the thing that was most surprising. The other thing that was really surprising, and this was really important to me, and this was very human, was how incredibly generous, gentle, and understanding Alan Greenspan is. Most people would not think that, right? He was the wizard, the maestro. He mumbled with great integrity, as you would say. He didn't want me to be on the Federal Reserve forever. He didn't know who I was and all these things. He sort of thought I was a affirmative action appointment. No, he did. I mean, I make up nothing. I say things in a funny way, but I only tell the truth. And this is all public. But he gave me a chance. And I, of course, do what I do, which is I work my butt off, because that's what, I don't know, that's what black kids do. That may be what Jewish kids do. Yeah. I don't know. And after 3 or 4 months there, he called over to the White House and said, I was wrong. This guy Ferguson is good. Thank you for sending him. And then when Alice Rivlin stepped down as vice chair, he called over to the White House and said, I want Ferguson as the vice chair.
Wow.
He alternated trips to Basel, where central bankers get together over fine wine to make the world a better place with me, which had not normally been the case. Normally the chairman went and he said, no, Roger, you can go and do half of it.
Wow.
He put me in charge of a number of things. And then most importantly, on 9/11, he called me from Switzerland. He happened to be in Basel at that time. And he asked what I had done. And he said, sounds like you've done all the right things. When he got back, he said, I'm going to go sit in the corner office, and you keep running the system for the rest of the week. That was, you can imagine. I go from being this little know-nothing kid out of Northeast D.C. to being the vice chairman of the Fed at the request of the world's most powerful person.
It's incredible.
So in some sense, that is, personally the most surprising.
Just maybe on that story, I hope you don't mind me asking a somewhat uncomfortable question. But the Fed, had quite a run. You mentioned Greenspan. They had quite a run of Jewish leadership. Greenspan, Bernanke, Yellen, and you worked all around them. Just from a pure career progression point of view, did you ever consider conversion?
Yes.
Yeah, you did.
If you know anything about as you do about Christianity, I moved up from being low church Baptist to being a high church Episcopalian. So I don't know if I could make the big jump. Maybe I could.
Well, if you were Fed chair today, where do you think inflation is going?
Unfortunately, I think Jay Powell said what I would have said, which is right now it's stuck and likely to go higher, and we hope that it will gradually come down. I'm anxious about that. There are some signs that things look like they're stable, but there are also some signs around the edge. But the biggest problem right now is inflation is running hotter than it should and not likely to turn. And he said something I definitely would have said, which is it is his job to make sure that inflation is transitory. During the pandemic, I think he got into a debate with academics, is it transitory, permanent, et cetera. And what I have always said publicly is the job of the Fed is to make sure inflation is transitory. And Chairman Powell is now sort of saying that. So I think I would be roughly where he is today, but maybe a little more uneasy about whether or not it's going to start to come down.
And do you have any thoughts, just based on that, how family or sophisticated family office institutions should be thinking about portfolio positioning as a result?
Yeah, so look, I think family offices should be thinking about portfolio positioning in a way that is consistent across the cycle, right? Because if you think about what family offices doing, large amounts of money, intergenerational, et cetera, I don't think, if I were running a family office and thought we're on the verge of an outbreak of hyperinflation, I'd have serious concerns. This feels like central banks trying to get inflation back down, and therefore I would keep my portfolio broadly diversified as one does, and think more about the longer-term intergenerational issues as opposed to, the economy of today.
Yeah.
Because the economy of tomorrow is going to be really quite different, I think.
Yeah.
And I would think about that.
I totally agree with that. You've said in the past, I don't remember the exact words you used, but basically using the tools of capitalism to solve the problems of capitalism.
Those are exact words I used.
Oh, yeah? Okay. Somebody gave me some good pointers. So what does that mean to you?
Oh, so look, what this means, and I've gotten in trouble a little bit for saying this. So if we look around our societies, there are a number of problems that are endemic, I think, to almost all societies. And I've learned they're true here in Canada as they are south of the border in the US. And they have to do with what we were saying in the US, the thing that we call the American dream seems to be slipping further and further away. I don't know if there's a Canadian version of that. But
we never had a dream.
Now, see, that's not true. You dream of being independent.
Yeah. Staying independent, yeah.
Staying independent. You didn't have that. Didn't have to worry about that dream before.
Low ambitions. We had low ambitions.
This is not public, by the way.
No, it's not public.
I've got to get back across the border tonight. What'd you say? No, this is very serious. And I worry about this. So at least in the U.S., the American dream has 4 pillars, and I'm going to add a 5th. One of them is housing, the ability to afford housing. I think that's a problem here in Canada, at least in Toronto, as I hear. Secondly, challenges around healthcare. You don't have exactly the same that we do, but unfortunately in the U.S., your zip code determines your health outcomes, and we saw that dramatically during the pandemic. So health inequality. The third is obviously income and wealth inequality related to the first 2 in obvious ways. We have a real question about the value of education in the U.S. Education used to be, in my case, and in the case of many people in my generation, the great equalizer. Do what my mother said, stay in school for as long as you can. And in the U.S., guaranteed to get into the middle class, blah, 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 no longer thought to be the case. And the 5th major crisis well, there are 2 more. One is broadly retirement security and financial insecurity, which we've talked about a bit. And then obviously, climate and climate change. So one sees these social problems. I got in trouble a little while ago for saying they're problems of capitalism, but they are certainly problems in capitalist societies. And I'm a big believer in using the tools of capitalism, all of which private ownership of property, investment for profit, the ability to control your own labor, et cetera, to solve those problems. And I believe that you can make an awful lot of money if you come up with smart solutions that speak to those problems, because people will pay for them. Now, I am not a B2C person, so I'm sure there are a bunch of other things that one can do, and I'm not a real estate person. There are things you can do in that space. But what I am doing now is basically venture capital, a little bit of PE, some private credit. And all of it is focused on solving, one of these fundamental problems.
Right.
And so that's why I believe one can use the tools of capitalism to solve the crises and challenges of capitalism.
So if you take those problems within capitalism that you're addressing today, and obviously you're involved on the healthcare side, could you tell us a little bit about what you're doing there? Why is it exciting, and how is it actually addressing the issues?
All right, so look, we saw a demonstration here of the newest things going on in healthcare, right? That brain-computer interface demo. So imagine with AI. So think about almost any affliction that people have from health, and what I'm discovering is that there are companies that are focused on those challenges. So all of you understand cancer research, AI, et cetera. So a couple of my companies are very focused into that. In the U.S., we have a challenge around and you do too, around demographics, aging population, not enough people in nursing, et cetera. So using a combination of AI and mobile telephony, et cetera, to solve those problems. So I've got a couple of companies focused in that kind of space.
And this is all in Red Cell Partners?
This is in Red Cell Partners, yes.
Yeah, okay.
Red Cell, let me be quite clear, I didn't know I was going to do a formal ad, so give me a moment to do a formal ad for Red Cell. Red Cell Partners, which I am one of the partners and chief investment officer, is an incubation engine in the U.S. that founds companies in healthcare, defense, and cyber. And then my job is to allocate the capital across that. And blatant advertisement, anyone who wants to invest with us, please come and talk over in the corner. But that is what we're doing,
Yeah.
right? And so those are some of the companies. We're doing, drug discovery, et cetera. And so there's, so much in that space. The one problem that I didn't mention, but is implicated by Red Cell, is we thought after the fall of the Berlin Wall that we would have a peace dividend. We had about 2 years of peace dividend, and now we're back into what has basically been, for the U.S., continuous but quiet warfare since roughly 9/11. And we need to figure out how to, in all honesty, because the world is a dangerous place, how to modernize the U.S. military, which would obviously by definition help Canada since there's a North American defense angle. And so Red Cell is also focused in that space as well, which is another big problem of society.
I mean, if I understand correctly, I think a lot of Western governors are increasing their military spend right now. What does that actually mean for your companies?
Oh, for us, it's not just that they're increasing military spend around the world, but the nature of military spend has changed. And the theory of the case is that, got a little trouble, so I'll balance what I used to say. I used to say that wars of the future are going to be driven by, silicon as much as metal. And I was with one of our four-star generals who said, roughly equal. So what we're doing is we're focusing in primarily on software, but we're using our software and our AI capabilities to solve some of the military's oldest problems. And some of those problems are things like logistics, which seem pretty boring. But if you can't move men and material and medicines, et cetera, to wherever you need them, then it's going to be really challenging. And then we're also doing a lot on the defense part of defense. So think cyber and think drones. And so one of our companies has done something really important. One of the biggest vulnerabilities that all of us have is the software that you're using, if it's open source software, has come from somewhere. And until recently, no one knew where somewhere was. And one of our companies, Hunted Labs, has now published 2 papers showing that some fairly standard software is coming out of places that are close to the Kremlin. And this is a whole new thing, a new kind of defense that we're working on. So we're doing a bunch of things that I hope will make Western society broadly much better off. And at the same time, we're doing this for profit for sure.
And just on 1 minute on some of your other companies outside of Red Cell.
Oh, so I have a personal portfolio, is what he's referring to, of companies that I've been working with over the last 10 years, more or less 10 years. The origin story for most of these companies is out of academia. I'm a professor at Cambridge and Cambridge in the UK, the original Cambridge.
The real Cambridge.
The real Cambridge.
Yeah.
You have a Cambridge here. So there are Cambridges everywhere. So the original Cambridge, not the North American Cambridge. And out of that lab, I don't know if you know the history of Cambridge, between Oxford and Cambridge was always more the technical one. My favorite story about Cambridge is I keep walking past this building, the Cavendish lab, and it says, in this building, the electron was discovered. And you think, my God, and it really was in this building. And that's the kind of thing they do there, and they're still doing that. So I'm developing lots of companies out of that space, focused on some of the same things, healthcare for sure, focused more than Red Cell on green transition, from small things to large, so power leakage at the socket to so-called green hydrogen and green nitrogen. And so that's a whole set of portfolio companies I'm working on as well.
Very cool. Yeah, I mean, your advice is highly sought after. I mean, you've advised.
I came up here to do it for nothing.
Yeah, and I appreciate it. Don't get me wrong. But it is.
Yeah, normally I get paid a lot.
Yeah, I know. And thank you again.
I guess I really like you, man.
Yeah. You're the only one.
Well, you got friends.
But But you obviously you advise presidents and multinationals, and in this room are allocators of capital, family office, intergeneration stewards. What advice would you have for all the folks and families in the room?
A couple of things, and they are, I think they're both, I think they point in the same direction. One is the theory of intergenerational wealth is balancing risk-taking and capital preservation, right? And you think about your father, your grandfather, whoever, your great-uncle, whoever it was who made your family fortune, they took really big risks that fortunately paid off. Don't lose that gene. Mm-hmm. While at the same time balancing capital preservation. What I've seen, and I work with a family office in the US, and what I've seen is the balance, the yin and yang, the back and forth.
Yeah.
We don't want to lose it. On the other hand, if you don't invest it wisely and take reasonable risk, you're not going to keep things going. Because, we all have, there's a pyramid, right? Mm-hmm. So it started with good old grandfather, great-grandfather, immigrated from Russia, started something, invested in an acre of land, and then owned all of Toronto. And there's a
few of them, yeah.
There's somebody like that, right?
Yeah.
That one person, and now they're 40, and those 40 will soon be, 140.
Yeah.
And so you've got to be thinking about that.
Yeah.
And the second thing that I find even harder is managing the obvious inequities as you get more and more people. And how do you think about family values and supporting everybody, and at the same time recognizing that not all the cousins are going to be equally capable of running the business? Mm-hmm. And being quite clear about the difference between being a beneficiary, being an heir, and being a member of the family versus being a manager, a leader, the one actually allocating the capital.
Yeah.
And, that, I don't know any of these families at all.
We don't have any of these problems in Canada.
Yeah, exactly. Yeah. I know you don't. And then the final thing is how well you speak French and English.
Right.
Then I think that becomes a more Canadian problem. No, but very seriously, it's this balance, risk-taking versus capital preservation, being a beneficiary and a beloved member of the family, but not being able to put your hands on the controls.
Yeah. Yeah.
And not presuming that because your name is whatever it is and your genealogy is whatever it is that you get to, drive the ship. Because there's a big fiduciary duty of thinking about, generation 5, generation 6, generation 7. And not everybody in generation 3 or 2 can do that equally well. Mm-hmm. And so that's as I work with family offices, that's a thing that I try to deliver for them.
Roger, that was fantastic.
Oh, you're really kind. Thank you.
Thank you. I really, especially because it came for free. It wasn't. I honestly, the investment that you've made, first of all, in helping us raise the kind of money that we're raising for pediatric mental health, we really appreciate it. Your wisdom, your poise, your courage, all your experience, we really appreciate it. Thank you so much
for
taking
so much.
the time to be here.
Great. That was great.
Thank you. And we have a small gift. And alongside this, a donation was made in your honor.
Thank you very much.
They're going to kill us if we don't take a picture.
Yeah, well, we have to do this.
Yeah.
So let me describe what this is if you can't see it. This is a picture of a balding black guy, God knows, with a big Federal Reserve briefcase and a Harvard emblem, wearing this tie.
Yeah.
No, seriously.
We have intelligence in the back. You don't need...
So much for it. So thank you very much. This is great.
Thank you.
Thanks.
Thank you. Roger, thank you so much.
Thanks a lot.
Okay. All right. That was fantastic.
Okay. Thanks.
And our next guest,